All right, let's talk about January 23rd, 2026. If you just glanced at the market headlines, you might think, pretty flat day. But you'd be so wrong. Because underneath that calm surface, there was this massive tug of war going on, pulling investors in two completely opposite directions. It was a real tale of two markets. So, let's start with a number that just sent shockwaves through the entire tech world. Negative 17%. Just let that sink in for a second. That was the absolutely staggering one-day collapse of the semiconductor giant Intel, a company that basically defined modern computing, just brought to its knees. And look, this wasn't some slow bleed. It was a sudden, brutal freefall. It all boiled down to one single disastrous earnings call, where their forecast exposed these deep, ongoing failures in manufacturing. That one announcement, it became the catalyst for the entire market story that day. Okay, so let's dig into what really happened to Intel. Because this failure wasn't just about a single bad quarter. No, it revealed a fundamental problem. They just couldn't keep up in the very industry that they themselves helped create.
This quote from Stacy Rozgan at Bernstein, man, it just perfectly captures how Wall Street was feeling. You've got this AI boom happening right now, this incredible, astronomical demand, and Intel is just completely on the sidelines, bogged down by its own supply chain and execution problems. It was, just like he said, an enormous missed opportunity. And that road to recovery? It's looking really, really long.
So that's the billion-dollar question, right? Intel's collapse created this huge vacuum of fear in the tech sector. But, and this is the fascinating part, on the very same day, an incredibly powerful counter-narrative was already starting to take hold. Because while Intel was absolutely crashing and burning, another semiconductor giant was defying gravity. This is the story of how the promise of AI proved to be so much stronger than one company's failure, creating this massive, dramatic divide right down the middle of the tech world.
And this just brilliantly illustrates the other side of that coin. You had analysts basically writing Intel's obituary, but at the exact same time, you've got financial titans like BlackRock's Larry Fink doubling down, insisting that this AI revolution isn't just real, it's the main engine that's going to drive all future global growth. What a contrast.
And here it is, the whole story in a nutshell. On one side, you've got Intel, just sinking under the weight of its own manufacturing failures. And on the other, NVIDIA, rising on this absolutely incredible news, reports that China was about to greenlight purchases of its super advanced H200 AI chips. So you have two chip makers, two wildly different stories, all playing out in a single day.
But you know, this story is so much bigger than just tech. That anxiety sparked by Intel's fall, combined with all these growing global fears, it triggered a massive rotation across the entire market. Investors started this frantic dash away from digital promises and straight towards physical safety.
And this number, this was the ultimate symbol of that flight to safety. For the first time in history, the price of a single ounce of silver broke through $100. Wow! This wasn't just speculation, you guys. It was a crystal clear signal that investors were desperate for tangible assets, stuff they could actually hold in their hands.
And the data tells the exact same story. Look at the top-performing sectors. Energy and materials. They were flying high, driven by fears of inflation and this massive winter storm that was about to hammer the U.S. And meanwhile, which sector was the biggest loser of the day? Financials, the very symbol of the paper economy.
So the bottom line is this. Investors were cashing out of stocks and bonds, paper assets, and buying up things they could physically count on. Hard assets like precious metals and energy became the new safe havens as fears about currency devaluation and global instability just kept growing.
So let's zoom out a bit and really understand the why behind this huge shift. It wasn't just because Intel had a bad day. There was a perfect storm of global and domestic fears brewing, and it was pushing investors right to the edge.
I mean, the reasons for all this fear were coming from all directions. You had geopolitical tensions flaring up around Iran and a new resource race for rare earth minerals heating up in Greenland. Here at home, a monster winter storm was threatening to paralyze the economy. And then in the currency markets, it was just chaos, with the Japanese yen swinging wildly, which raised serious questions about Japan's own government debt.
But maybe the most telling sign of the market's anxiety was this weird little anomaly right here. The VIX, Wall Street's fear gauge, it actually rose on a day when the major indexes were basically flat. That is highly unusual. It's a clear sign that underneath it all, investors were actively buying protection, literally paying for insurance against whatever chaos might unfold over the weekend.
So all of this chaos, all this division, it left investors standing in a very clear crossroads.
It created two very distinct strategies for how you might navigate this uncertain new landscape. So let's break down these two paths, shall we? First, you've got the aggressive path. You double down on the AI revolution, you bet on the chip makers like NVIDIA and the energy companies that are going to power all those data centers. Then, you've got the defensive path. You hedge against all this chaos with hard assets. You buy into the silver rush or maybe defense stocks. You can get exposure to these ideas through ETFs that track these sectors, like SMH for semis or SLV for silver. Both strategies make sense, but man, they both come with some pretty significant risks.
And really, that's what it all comes down to. That's the central dilemma of the day. As we stand here, caught between the incredible promise of our digital future and the very real threats of the physical world, the biggest challenge for every single investor is deciding which of these two powerful stories they believe in more.